Hey guys, what is up and welcome back to another video, and in this one I might be talking about something that's a little bit controversial because I'm going to be sharing my opinion on why I don't think that you should day trade if you're below PDT. And for those who may not be aware, the PDT rule is a rule that is instituted by the Financial Industry Regulatory Authority in the United States. Its acronym is FINRA, and essentially the rule states that you're only allowed to take 3 day trades and 5 business days if you have below $25,000 of equity. The rule itself has a lot of controversy as it excludes a lot of people from being able to day trade, and subsequently people have looked for an alternative to get around PDT. And typically there are 2 workarounds that people generally talk about, and in this video I'm going to address both of the workarounds and explain from my perspective why it's not worth engaging in either of these alternatives. And finally, if you stick around to the end of the video, I will propose what I would do if I no longer had a PDT funded account. So the first solution that we're going to be talking about is to open up a cash account. This solution isn't a horrible one, but it does still have flaws that makes it not very viable in my opinion. It does solve the problem of not being able to take more than 3 day trades in a 5-day business period, but the issue is that your funds don't immediately settle. And to understand why this is such a problem, let me propose an example. So let's imagine that we have a cash account and a PDT funded margin account, and in each of them we have $5,000 to trade with. In the cash account, it takes 2 days for funds to settle, so therefore we have $2,500 to trade with every single day. And with $2,500, given my performance this month of December, I would expect to be able to make about $30 a day. Now, in a PDT funded margin account with $5,000 of equity, I could expect to make $250 a day, and this is a pretty extreme difference, and it's simply because the funds in a margin account immediately settle, and when you're above PDT, you're allowed to take as many day trades as you wish. So I'm able to take multiple $5,000 positions in a given day, and oftentimes I'll end up trading more equity than I even have in my entire account. Just for a little bit of a reference, if you spend 1 year trading in a cash account with $5,000 of equity, you would expect to have traded around $630,000. But if you were to have traded in $5,000 positions in a margin account, at least from how I've been trading, I'll have traded several millions. So it's a lot more practical to make a livable income when you're trading in a PDT funded margin account. And before we move on to the second solution that is talked about when trying to avoid PDT, I want to very briefly ask you guys to like the video if you've been enjoying it and subscribe if you haven't already. The next solution that we're going to be taking a look at is signing up with an offshore brokerage. The PDT rule was instituted by FINRA, which is a United States agency, and therefore if you sign up with a brokerage offshore, you are no longer subjugated to the PDT rule. And at first glance, this seems like an amazing option. There is no minimum deposit of $25,000, and you get to participate in a margin account where funds immediately settle. Therefore, you don't have to deal with the problems that a cash account has. But when you begin to look at the actual structure of these accounts, you begin to realize that it isn't very practical to be able to be profitable. And the reason why is the amount of fees and commissions they charge. If you decided to go the offshore brokerage route, you would most likely end up trading through CMEG, and there you would be expecting to be paying $150 a month in platform fees. That annualized would turn out to be $1,800 a year. And if we go back and refer to the previous example in our cash account where we deposit $5,000, in this margin account, you would be paying 36% of your starting capital in platform fees to trade for 1 year. And we haven't even mentioned the predatory commissions they charge. If you don't sign up with a referral, you're going to be paying $5 to open a position and $5 to close a position. If you sign up with a referral, it brings it down to $3 to open a position and $3 to close a position. So for one round trip, you'll be paying $6 in commissions. And if you decide to scale out of the position, they'll charge you an additional $3 for every time you scale in or out. So between the $150 a month for platform fees and the $6 round trip on commissions, that will make it very, very difficult for you to be profitable. And to really illustrate just how difficult this commission structure is, let's see how it would have impacted my trading today. As you can see on the screen, today I made $422 across 32 trades with an 84% winning accuracy. And if we were to have paid commissions on 32 trades with $6 being the round trip, that would have came out to $192 in commissions. And based off of my total profit, that would have meant I would have paid 45% of my profit to commissions. And that is extreme. That is a lot of money to be paying to commissions, and that is not a structure that I want to be trading under. And just to be clear, $6 for a round trip for the position sizing that I trade is by no means ordinary. The reason that they can get away with charging such exorbitant fees is because they have no other option. People that are trading through CMEG are often from the United States trying to avoid PDT, so they're able to charge very high fees because you have no alternative. And I personally don't really think that accepting the fees and the commissions is very worth it. I would personally recommend that you don't go this route. So at this point, you might be thinking, Eric, you've spoken out against both of the solutions, and you recommend that I don't do either, so what should I do? And in all honesty, I've given this a lot of thought, and I can't come up with a solution that I think that everybody will like, but I'll give you my honest opinion. I think that if you're below PDT, your best shot is to create a budget with your current income and try to figure out how you can save $25,000. During this saving process, invest all of your money into very safe ETFs and continue to just save until you get that $25,000. During this time, I would recommend that you paper trade. Before I had a PDT funded account, I had paper traded for several months, and then whenever I finally did get my PDT account and went live, it was a smooth transition. And I think that being able to use a paper trading account while you are saving up and preparing to go live is the ultimate way for you to set yourself up for success. And I know that it's not the perfect answer and it won't be suitable for everyone, but it truly is, in my opinion, the best way to go about it, because there are many issues with trading in a cash account and an offshore brokerage account. And I just think that in general, the best advantage that you can get in the stock market is to get that PDT funded account. I have people ask me what sort of technology am I trading on because they're worried that that might give them a disadvantage if they're not on, whatever technology I'm trading on. And I mean, I just trade on a laptop. I don't think that the laptop or the computer matters that much. I don't think that your platform matters all that much. But what really, really does matter, in my opinion, is being able to trade in a PDT funded account, because it gives you so much more opportunity to make a lot of money. Like, you can make $100,000 a year with a $25,000 account, but you're not going to be able to make $100,000 a year with a $5,000 account, at least in my opinion. I'm sure that it can be done, but I just don't think that that's very reasonable to expect. Anyways, guys, with that being said, I really hope that you guys enjoyed the video. If you did, be sure to smash the like button and subscribe. It helps me out a lot, and I will see you all in the next video. I'm going to be uploading again sometime in the near future. Maybe it will probably be in January, but the video is going to be about how to properly utilize a paper trading account to make yourself be ready to go into a live trading account.